Hey everyone, and today we are going to talk about two companies that seem to have a good potential ahead based on their recent filings. The first one is a leading digital infrastructure provider that has secured smart city contracts worth over 100 crores, and the second one is a defense electronics specialist that has signed a strategic MOU with US based partner for advanced rocket motor technology transfer, transforming it into a full-fledged rocket system manufacturer. So together these developments show that how digital infrastructure growth and defense self-reliance both are creating powerful tailwinds for niche technology players with strong execution and global ambitions. So welcome to another episode of Noisemaker, where we keep things simple and talk about companies that may not always come in the spotlight, but they have a strong potential for future. I am Saizal Agarwal, Equity Research Analyst at Desvelado Advisory, and today we'll be talking about two companies that are making solid progress in their business, and if current trends continue, they might keep growing even further. But before that, let's take a look at the disclaimer. So any discussion, facts or writings provided here are for informational purposes only and do not constitute any buy or sell recommendation. So please conduct your own due diligence before making any investment decision. Now let's move to the first company. So Railtel Corporation of India Limited, which is a Navratna PSU under India Railway that provides nationwide telecom, broadband, VPN services using its extensive optical fiber network, and this also supports railways operation, safety system and commercial connectivity across 6,000 plus stations in India. Now the company has secured two smart city orders worth 103.5 crores and 70.9 crores from Nashik for network backbone execution with completion by December 2026, and 32.5 crores order from Panvel for safe city connectivity with operations and maintenance till March 2031. Now, what's particularly impressive about these wins is that they reflect the company's integrated telecom plus ICT capability, PSU credibility, and proven execution track record, making it preferred partner under the Digital India initiative. Now, by adding around 1.4% to the existing 7,197 crores order book, these contracts not only supports FY26 ka 25% growth guidance through the execution heavy Nashik project, but also bring in long duration annuity income from Panvel contracts, thereby improving the earnings quality as well beyond the usual 4 to 5% projected margins. Now the company is also expanding its data center capacity, with Noida scaling from 5 megawatt to 10 megawatt over 2 years, and planning 4 to 5 edge data centers in FY26 targeting smart cities and enterprises. Now management sees 15 to 20% annual growth from FY27, adding higher margin annuity revenues that can lift the margin and reposition it as a digital infrastructure services provider. Now Nishant will be joining in to give us more information. So Nishant, how has Railtel performed financially in FY25?
Yeah, thanks, Hazel. Railtel has delivered quite impressive growth numbers in FY25. Revenue from operations rose significantly by 35.4% year on year to rupees 3,477.5 crore compared to rupees 2,567.8 crore in FY24. The growth momentum remains strong and with consistent performance across quarters. Though Q1 FY26 revenue was rupees 743.8 crore, down 43.1% year on year. This reflects the project-based nature of their business. On profitability side, EBITDA grew substantially to rupees 585.2 crore in FY25 from rupees 491.5 crore in FY24, with margins maintained at a healthy 16.5%, indicating better operational efficiency and project mix. Q1 FY26 EBITDA stood at rupees 133.6 crore with an even better margin of 17.6%. Talking about the net profit, it rose impressively to rupees 299.8 crore in FY25, up 21.8% year on year from rupees 256.2 crore in FY24, with net margins at 8.6% in Q1 FY26. Net profit in the amount terms reached rupees 66.1 crore with a margin of 8.9%, maintaining solid profitability despite revenue fluctuations. So now I would like to ask you, Sedal, what is actually driving Railtel's strategic shift beyond just railway infrastructure?
Excellent question, Nishant. I think Railtel's strategic evolution is quite fascinating because these smart city wins they help to reduce their reliance on railway, which currently accounts for about 30% of their order book. And they have also building a bridge for revenues until the larger 500 crores coverage projects scale up in FY27 to 28. And most importantly, these contracts creates room for cross selling. They're expanding data center services and ISP offerings as well. Now, the company is also cautiously building its international business in ICT and railways, starting small to gain experience. While this will require different capabilities and higher effort, the strategy could open new growth avenues for over the medium term. And if executed well, these smart city orders could definitely accelerate the company's transition from a railway link contractor to a broader digital infrastructure and services integrator, enhancing a growth visibility and driving potential valuation re-rating as well. So, Nishant, how do you see Railtel positioned in the competitive digital infrastructure landscape?
Yeah, I think Railtel has some unique competitive advantages that set it apart. As a Navratna PSU, they have inherent credibility with government clients, which is crucial for smart city and digital India projects. Their existing pan-India optical fiber network gives them a significant infrastructure advantage that's a very hard to replicate. Also, the shift toward annuity-based revenues from data centers and O&M contracts should improve earnings quality going forward, and it can also reduce the typical volatility seen in the project-based businesses. Now, with management targeting 15 to 20% annual growth from FY27 and expanding into higher margin services, retail seems to be transforming into a more diversified, stable digital infrastructure player. The combination of PSU backing, infrastructure assets, and strategic positioning in India's digital transformation story makes them well placed for sustained growth.
Okay, now let's move to the second company, which is Apollo Microsystems Limited, and this is the pioneer in design, development, assembly, and testing of electronic and electromechanical solutions for the defense sector. Now, the company, through its step down subsidiary, has signed an MOU with Dynamic Engineering USA for technology transfer, co development, and potential license production of rocket motors for BM-21 Grad rockets. And this is a game changing development that aligns perfectly with management guidance for 45 to 50% revenue CAGR over FY26 to 27. And what makes this particularly strategic is that Apollo Micro has already developed 122 millimeter warhead in Warhouse, and this collaboration will now allow them to contribute their own warheads with domestically produced rocket motors, transforming them into a full-fledged rocket system manufacturer. Given that Grad rocket is one of the most widely used artillery system worldwide, this move not only support Make in India initiative but also creates strong export opportunities. Now, trials of integrated system are expected to begin by mid 2026 with full-scale production to follow. So, Nishan, can you walk us through Apollo Micro's recent financial performance?
Yeah, absolutely. Cecil, Polo Microsystem has been delivering exceptional growth numbers. Revenue from operations rose dramatically by 51.2% year on year to rupees 562 crore in FY25 compared to rupees 371.6 crore in FY24. The company demonstrated steady growth momentum. Though Q1 FY26 revenue was just rupees 133.5 crore, down 17.4% year on year, reflecting the project driven nature of the defense business. So, what's really impressive is that profitability expansion. EBITDA grew to 129.2 crore in FY25 from rupees 83.8 crore in FY24, with margins at 23%, indicating strong operational efficiency. Q1 FY26 EBITDA stood at rupees 40.9 crore with an even healthier margin of 30.6%. Net profit performance was outstanding, rising to rupees 56.3 crore in FY25, up 81% year on year, from 31.1 crore in FY24, with net margins improving to 10%. Also in Q1 FY26, net profit reached rupees 18.5 crore with a margin of 13.9%, maintaining solid profitability. But Cecil, what's Apollo Micro broader strategy for building indigenous defense capabilities?
So Nishant, I think the company is taking a very strategic approach to building indigenous defense technology, where the company is planning to increase their R&D spending to around 100 crores in FY26 to own the intellectual property in critical systems like guidance, telemetry, embedded computing, and this will boost the margin, reduce import dependence, and enable royalty or export opportunities for the company. Now, they are simultaneously scaling up their manufacturing and targeting the qualified defense exports of 100 crores in FY26. And the company currently holds an order book of 735 crores with large upcoming defense programs like QRSAM and MIGM, and they have strong revenue visibility for the next few years. Now, this steady inflow of order ensures predictable cash flow, supports operating leverage, and gives the company confidence to invest in capex, ultimately driving both top line and profitability. So, Nishant, how do you see the company positioned in India's defense indigenization story?
Yeah, I think Polo Micro is perfectly positioned to benefit from India's defense self-reliance push. Their focus on developing indigenous IP in critical defense technologies combined with strategic partnerships like this US collaboration gives them a unique edge. The rocket motor technology transfer essentially transformed them from a component supplier to a complete system integrator. With defense exports being a key government priority and global demand for proven artillery systems remaining strong, Apollo Micro has significant export potential beyond the domestic market. Their strong order book, improving margins, and R&D investments create a solid foundation for sustained growth. So the combination of indigenization capabilities, export potential, and strong execution track record makes Apollo Micro a key beneficiary of India's defense modernization and Make in India initiatives.
Okay, thanks a lot, Nishant. That really helped us to understand the strategic direction both these companies are moving in. And now let's take the quick look at how some of our previous picks have performed. Sanghvi Movers Limited, it rose from 283 rupees to 368.5 rupees, which shows a gain of around 30.2%. Datamatics Global Services Limited, it slipped from 1035 rupees to 909.2, showing a decline of 12.2%. Transrail Lightning Limited, it moved from rupees 731.9 to 797.5 rupees, and this makes a gain of around 8.9%. VST Tillers Tractors Limited, it rose from 4,575.2 to 5,275, which shows a gain of around 15.3%. AXISCADES Technologies Limited, it increases from 1,283.5 to 1,542 with a gain of around 20.1%. So overall, a pretty good mix of gains, and we'll continue to monitor all these companies closely to see how they shape in the coming quarters. And here is the QR through which you can access all these companies which we covered recently. And now let's move to the summary of today's company, which we included in Noisemaker. Railtel Corporation of India Limited, where the company secured two smart city orders worth 103.5 crores, 70.9 crores from Nashik, and 32.5 crores from Panvel. Apollo Microsystem Limited, where the company through its step-down subsidiary has signed an MOU with Dynamic Engineering USA for technology transfer, co-development, and potential license production of rocket motor for BM-21 Grad rockets. So that's it for today's edition of Noisemaker, and if you found this breakdown informative, you can scan the QR code to read the full report, and we'll be back soon with more simple and clear market updates. Until then, stay curious, stay ahead, and stay informed.